On Business Incorporated today. South Africa faces severe power outages as two of its coal-fired power plants break down. Kenya's KCB Bank injects over 120 billion shillings to support oil marketing companies. And gas deal between Egypt and Lebanon gas deal that gets stalled over new terms by the World Bank. Good afternoon. Welcome to Business Incorporated. I'm John Mekwa. We'll begin as usual with market numbers, starting from our usual point, which is Africa. It was mixed at intraday. Nigeria, which closed negative on Monday, sustained that bearish sentiment, but flattish at intraday. At the same time, its South African counterpart was up 0.42% and higher within the 66,000 points. In Northern Africa, Egypt was 0.04% in the red at intraday after it ended Monday's session in the green zone, adding around 5.5 billion Egyptian pounds to the market capitalization. While in the Eastern Africa, Kenya closed Monday's trading session with over 0.5% advance. From Africa, we move to the Middle East, where it was mostly positive for major markets at intraday. In the United Arab Emirates, the Dubai index went up 0.33%, while the Abu Dhabi index was higher by 0.86%. Almost 1%. Elsewhere in the region, Saudi Arabia and Qatar gained more than 1% and 0.59% respectively, and this all happened at intraday. Now let's head to the European markets. There, the bear flowing again in Munich as Oktoberfest opened for the first time in 2 years. That was over the weekend, drawing hundreds of thousands in the first few days. The annual event is an economic boom for the region, but this year there's still question marks surrounding the events. We have joining us now to give us the details, Stephen Beardsley from Berlin. Hi, Stephen. Good afternoon. Good to have you. I hope you didn't get caught up in that party so much, but does it look like this year's festival will live up to the past years?
Yeah, this is the 187th Oktoberfest. It ends on October 3rd. And in those 3 weeks, at least before the pandemic, you could expect about 6 million visitors drinking more than 7 million beers. And together, that could inject about 1.2 billion euros into the surrounding region. That's the figure from 2019. You can imagine the hotel stays, the restaurants, and other expenditures that visitors are making. Now, this year, there are no signs that there's any hesitation amongst visitors. We see that there are no mask requirements, there's no testing requirements, and we've seen that visitors for the opening weekend were standing in hours-long lines to get into some of the tents, those without reservations, that is. However, that said, it turns out that the opening weekend, the first 2 days, the numbers were a bit lower than the 2019 opening, 700,000 this past weekend compared to 1 million then. Organizers blame that in part on bad weather, so we'll have to see whether those numbers stay down or whether they actually do rebound to reflect what we've seen in years past.
Yeah, so it's a period of surging inflation driven obviously by the energy costs. How much impact is that having on the events this year?
Yeah, city organizers earlier this year weren't really sure what to make of the pandemic situation later this year by the time that this fest would start. So they were sort of going into unknown territory. They also knew that from previous festivals that COVID numbers tended to rise afterwards, COVID infections. And so ultimately they decided to go ahead, and even the political leadership admitted that, look, we're probably likely to see a bump in infections after this festival takes place. I think because of the nature of the Omicron variant right now, that's something that many felt that they could live with. Then the situation of the war, of course, came about. That changed a lot. That changed the mood also. And there were many questions of whether it was even right to have such a big celebration at a time when Europe again found itself facing armed conflict. But lately, the biggest issue has been that of inflation. and what that meant for traditional brewers who put on this fest, as well as the visitors who would be coming and would be asked to shell out quite a large amount of money even before the inflation of this year really set off. So what we've seen this year is that a liter of beer, the traditional serving size at Oktoberfest, the average price is 15% higher than it was in 2019. That's considerable. Now, beer prices do often rise between Oktoberfest. That's almost a law of nature, but 15% is a bit high. It also reflects the pressure that many of these brewers are facing right now as their energy costs rise and as they find more and more supply disruptions that force them to pass along costs to their customers. In fact, we know that the German Brewers Federation, like many other industries here in the country, is asking for government aid to help offset some of those costs.
Yeah, really, it's about time. And how's the market taking this Oktoberfest thing?
Well, investors, of course, still waiting to find out what's going to happen tomorrow with the the U.S. Federal Reserve and the Bank of England in terms of raising benchmark interest rates. They expect higher rate increases that will have a ripple-down effect across global markets. And what we're seeing today is that European markets have started off in positive territory, mostly on bank shares, which banks, of course, stand to profit from higher interest rates. We've also seen the FTSE 100 is among those trading up a day after it was closed yesterday for the ceremony surrounding the burial of Elizabeth II. And in fact, it's driven up mostly by commodity prices and also those rising bank shares as well.
All right, Stephen, thank you so much. I will certainly catch up with you tomorrow for updates. All right, now, so let's go to Asia, where markets in that region rose as Japan's inflation accelerated and China kept its loan prime rate on hold. This comes as investors look ahead to the meeting of that Federal Reserve again that we're talking about now. Let's look at the numbers there. The Nikkei 225 is in the positive 0.44% at 27,688.42. The Shanghai Composite also following that sentiment at 3,122.41. Hang Seng is also even doing even much better at 1.16%, 18,781.42. In the U.S. now, stock futures slipped as Wall Street looked to build on a modest rebound ahead of another rate hike. We've been talking about this and it's affecting everything. Well, futures tied to the Dow Jones Industrial Average, we have the numbers there. It's in the negative, almost 0.5%, 0.49 at 30,965. Then S&P futures also in the negative, 0.55. NASDAQ also in the negative. Certainly looking forward to that rate hike, which seem to have been priced in, and we see markets already reacting to it since yesterday. And then we go to the global oil space now. It ticked up as OPEC and its allies keep producing less than their quotas, including Nigeria. But we're headed for a fourth monthly decline ahead of an unexpected further U.S. interest rate hike. And Brent crude futures for November settled up 41 cents to $92.41 a barrel. U.S. West Texas Intermediate crude for October delivery was at $85.82, and that's up 9 cents. The October contract, which expires today, and the more active November contract was at $85.53, and that's up 17 cents. However, analysts say that both the Brent and the WTI are headed for their worst quarterly drops in percentage terms since the beginning of the coronavirus pandemic. Staying in the oil space, Kenya financial services provider KCB Bank says it has injected over 120 billion shillings to support oil marketing companies importing fuel as it seeks to consolidate its support to the energy sector. This comes after the Kenyan government announced a few days ago the scrapping of subsidy on petrol over its unsustainability, in a move that could add to upward pressure on inflation. In a statement released, the country's commercial bank explained that the facility is also expected to support OMCS in the stabilization of fuel prices in the short term as the government phases out fuel subsidy. KCB has been facilitating oil importation into the country by financing oil firms under its portfolio that have won business under the open tender system through the Ministry of Petroleum and Mining. Since 2005, Kenya has been importing refined petroleum products through its OTS. And staying in Kenya, the central bank governor has assured members of the National Assembly that the country has adequate foreign exchange, as he was speaking during an induction workshop of the legislators. And he says that elements in the currency market and some commercial banks had contributed to the recent weakening of the shilling against the dollar. Data from the CBK shows Kenya's foreign currency reserves held by CBK increased to $7,372 billion. That's an equivalent of four years, 20 months of imports as of September the 15th. From $7.346 billion as of September the 8th, which is an equivalent of 4 years, 19 months of imports. At the same time, data from the country's treasury shows that Kenya's debt stood at 8.6 trillion shillings as at June this year, with public and publicly guaranteed external debt at 4.1 trillion shillings and domestic debt standing at 3.9 trillion shillings. South Africa is facing a risk of unprecedented level of blackouts this week after units at 2 of its coal-fired power plants broke down. The ongoing blackouts, which is the worst year on record, were a major contributor to the economy's 0.7% contraction in the second quarter. The country's struggling power utility firm Eskom Holdings, SOC Limited, began cutting 6,000 megawatts from the national grid in what it calls Stage 6 power cuts after generation units tripped at the Kusile and Creole power stations. The utility's chief executive officer, Andrea Reiter, announced that plans to procure about 1,000 megawatts of power from private power producers. Severe outages are a hazard to workers in deep-level mines and hurts manufacturing across Africa's most industrialized nation. In the metals market now, gold prices fell, weighed down by a firmer dollar and elevated U.S. bond yields as the Federal Reserve prepares for a hefty rate hike to cool inflationary pressures. Spot gold was down 0.4% at $1,669.80 per ounce, and U.S. gold futures were flat at $1,678.20. Although gold is considered a hedge against inflation, higher interest rates lift the opportunity cost of holding zero-yield bullion. Analysts say that technically the bearish trend is likely to continue and suggests that the price of bullion could fall to about 1,600 per ounce. In other metals, spot silver slipped by 1.4% to $19.34 per ounce. Platinum gained 0.2% to $920.56, while palladium dropped 2.5% to $2,173.31. The Lebanese energy minister has said that a gas deal between Egypt and Lebanon is stalled because of the Caesar action on Syria and new terms set by the World Bank. He added that the World Bank has set a new 10-term condition, the most prominent of which is increasing the tariff price. He noted that Lebanon already has formulated how the new tariff will cover the expenses. Under the agreement, the gas will be pumped through a pipeline to the Deir Amma power station in northern Lebanon, where it can add about 450 megawatts to the grid, equivalent to about 4 additional hours of electricity every day. On the 21st of June 2022, Egypt, Lebanon, and Syria signed an agreement to transport 650 million cubic meters of gas annually from Egypt to Lebanon via Syria in a ceremony held at Beirut. The export of Egyptian natural gas to Lebanon via Jordan began in December 2009 until it was stopped in 2011. Let's take a break now. After that, we have a conversation and more stories for you here on Business Incorporated. You're watching Channels Television. You're welcome back. You're still watching Business Incorporated here on Channels Television. Just before we go to that conversation, well, this morning we had a conversation on the surging inflation in Nigeria, which is directly connected to foreign exchange management policy. This is the perspective of the Chief Executive Officer of Center for Promotion of Private Enterprises, Dr. Muda Yusuf. He was a guest on Business Morning and insists that a more sustainable foreign exchange policy is needed.
If the situation was just about inflation rate of 20.5%, it could have been tolerable. But the reality is much worse than that. In many cases, in many instances, prices have doubled, prices have risen by over 50%, in some cases even 200%. I'm talking of the items that the average Nigerians consume, or items that the businesses also use in the course of production. So the situation is extremely very disturbing. And just as you said, of course, a number of factors, and just as the president also said when he was addressing the Presidential Committee on the Economy, some factors are domestic, which we can deal with internally, some factors are external. So the foreign exchange situation, of course, is a major one. Two components of it. There's the depreciation, which we all know about, particularly in the parallel market. Unfortunately, we have a situation where the parallel market is now becoming the major reference market. A good market will match demand with supply, to match those who are buying with those who are selling. What we have is an allocation platform. And that is creating a whole lot of distortions and a whole lot of corruption as well. A lot of inflows are not coming in because this economy typically does not depend only on oil. We have other sources. Well, it's a very big economy. Even with all the challenges that we have, there are still a lot of opportunities that can attract inflow.
Well, I was looking at Nigeria's economy, especially with inflation and how to get out of it. Now, let's go to our commodities segment. We're discussing natural rubber, which is an important material used in production of tires, refrigerators, and other necessary goods. Nigeria is ranked 12th among producers of natural rubber in the world. As at 2020, Nigeria produced 148,435 tons of rubber from 367,416 hectares of land. This compares negatively with countries like China and Côte d'Ivoire. And global demand for rubber is expected to increase by next year by up to 1.8%. What steps should Nigeria be taking now to position itself for that increase? Well, we have joining us for that conversation Nwezo Chinazo, analyst with Financial Derivatives Company, joining us virtually now from Victoria Island. Hi, Chinazo. Good afternoon. Good to have you on the show. Yeah, so it's good that we have this projection that the demand for rubber is going to increase. But to be, I think we should start by asking, are we making the most of what we have even at this time before we talk of, plunging into the future and an increase in demand?
Prior to the oil dependency, to these days of oil dependency, rubber cash crop has been a major driver of the Nigerian economy and a major earner of foreign exchange. But these days, recently, the attention has been diverted to the oil sector, and all investments and expenditure has been channeled to the oil sector, neglecting the rubber industry. So if the government is able to channel more investments to the rubber industry, they can provide extension services for farmers to produce more rubber crops with high yielding seeds, and then increase productivity in the rubber industry. So they are not doing this now, which is why the rubber production is still very much low. But if they do this, they can increase the rubber production and then meet up with the increasing demand for rubber in the nearest future.
And we see that the issue of deforestation could also be a threat. What should we be doing in that area?
Firstly, poverty should be addressed. Poverty is rising at an alarming rate, and these poor people are forced to move to the forests to search for shelter. And in staying there, they begin to illegally log trees, cut down trees, burn trees, which is affecting deforestation and increasing the rate of deforestation. So if the country addresses the rate of poverty first, they would be able to reduce deforestation. And also, afforestation should be encouraged to augment the trees that have been cut down, the trees that have been burnt. And in order not to defeat the purpose of this afforestation, they should make use of fertilizers that have low ammonium so that they can also reduce carbon emissions to the barest minimum.
So when we look at this 1.8% growth we're expecting in demand by next year, what steps should Nigeria be taking now to position itself to make the most of that?
Nigeria should firstly finance the agricultural sector. Diversification into the agricultural sector has been almost impossible due to lack of infrastructure, lack of adequate infrastructure to support the agricultural sector, lack of the poor land tenure system, which has been discouraging investors from investing in agriculture. The land tenure system is one in which land from families move from generation to generation. So it's hard for investors to acquire these lands and invest in them. And also the process of getting land or acquiring lands from the state government is very much bureaucratic. So all these things make the sector unattractive for investors. So if they are able to make farmers have easy access to land, make investors have easy access to land. Also, the Bank of Agriculture should be revived so that it can provide facilitation for farmers to boost the economy, to boost agricultural productivity, as well as create an enabling environment for farmers to also boost their agricultural yields.
Thank you so much, Chinazoa, analyst with Financial Derivatives Company. Thank you for your time. All right, so let's see what's happening in Zimbabwe. The International Monetary Fund has said that policy interventions of the last few months by authorities in Zimbabwe were in the right direction and have helped stop the currency's free fall. This comes as the Washington-based lender kept its growth forecast this year at 3.5%. However, the IMF says that the country's economic growth forecast this year at half the 7% recorded in 2021 is because of a slowdown in agricultural and energy outputs owing to erratic rains and rising macroeconomic instability. Meanwhile, the fund recommends that authorities allow greater exchange rate flexibility through a more transparent and market-driven price discovery process, tackle foreign exchange market distortions, eliminate exchange restrictions. Since the 7th of May, the president has introduced a range of measures to support the embattled Zimbabwe dollar, which was being sidelined by businesses and individuals in favor of the U.S. currency. Ghana's Minister of Food and Agriculture, Mr. Owusu Afriye Akoto, says that government has spent 2.6 billion cedis subsidy in cocoa seed and fertilizer, which generated 50 billion cedis worth of farm produce for the country. He was speaking at the 38th edition of the Farmers' Day celebration in Accra, the capital of the country. The minister said that the country's agricultural sector recorded an accelerated growth of 8.4% in 2021 compared to 7.4% in 2020. According to him, agriculture had risen tall because of the support given to farmers and reciprocal benefits, adding that it had made the sector perform extraordinarily good as compared to other sectors. Dr. Akoto says that farmers need to be commended for their achievement, particularly in the difficult global circumstances, which is apparent in many countries. That's where we say thank you so much for being a part of Business Incorporated for today, Tuesday. We'll have another episode for you tomorrow. I'm Imi John Mekwa. I'll see you at 10 a.m. tomorrow for Business Morning. Enjoy the rest of your day.
From the predictable to the unpredictable, news is fast-paced. On The World Today, we bring you stories from far and wide, narrating the intricacies of politics, diplomacy, war, and disasters. Join us as we make sense of it all, with in-depth coverage and analysis from across the globe. The World Today, every weekday at 5:30 p.m.
Thank you so much for joining us and welcome to News Track. I'm Olumide Macaulay. We begin at the courts. Justice Ijeoma Ojukwu of the Federal High Court, Abuja, has told the former governor of Jigawa State, Sule Lamido, and his co-defendants that they have a case to answer in the 712 million naira money laundering charges filed against them by the Economic and Financial Crimes Commission. The EFCC is prosecuting Mr. Lamido on a 37 amended count charge alongside two of his sons, Aminu and Mustafa Lamido. Other defendants include Aminu Abubakar, business associate to the Lamidos, and 4 companies. The former governor had filed a no-case submission after the FCC closed its case, stating that the evidence provided by the prosecution did not disclose any case against him. However, ruling on the no-case submission, Justice Ojukwu dismissed his claim, ordering him to open his defense on November the 8th. Meanwhile, a federal high court sitting in Jalingo, the Taraba state capital, has sacked the Taraba state ABC governorship candidate, Senator Emmanuel Bacha. Relying on evidence before the court that no governorship primary election was held in Taraba, Justice Samuel Namodveda ordered the conduct of fresh primary elections within 14 days. The judge ordered INEC to stop forthwith the recognition of Senator Emmanuel Bacha as candidate of the party and that he desist from parading himself as candidate of the party. He argued that it's not possible for all the election results to have the same handwriting, especially after the returning officer had, at the police headquarters, declared that no primary election held in the state due to security threats. Justice Amobeda described as inappropriate the alleged false declaration of results by the returning officer, Lawrence Onochukwu, at the Dambaba Sentai Airport, Jalingo, before departing the state via a private jet. Reacting to the judgment, counsel to the APC and the sacked candidates said they will study the judgment before either proceeding to the appeal court or submitting to fresh primary elections. Staying with legal matters, the Media Rights Agenda, MRA, says it has filed a Freedom of Information FOI suit at the Federal High Court in Lagos against the National Broadcasting Commission, NBC, for its refusal to act on the organization's information request. MRA is seeking details of payments of license fees by broadcasting stations and platforms operating in Nigeria and the amount of indebtedness of each station owing license fees. The organization is asking the court to declare the NBC's failure to provide with the information it requested as a breach of its right of access to information, as well as a flagrant violation of the